How do I calculate landed cost to Canadian customers? Landed cost is the total cost of getting a product from your location into your customer's hands in Canada. It is more than your manufacturing cost and more than the price you list on your website. It includes the product itself, transportation, insurance, customs duties, sales tax, brokerage, and local handling charges. If you quote prices to Canadian customers without understanding landed cost, your margins will bounce around with every shipment and you may accidentally underprice entire product lines. Breaking landed cost into components. The easiest way to approach landed cost is to break it down into major components. The first piece is the product cost, including manufacturing, packaging, and any internal handling you treat as part of cost of goods. The second is international freight, which can include transportation, fuel surcharges, and carrier fees. Then you add insurance if you purchase it, plus customs duties, sales taxes, brokerage fees, and domestic delivery charges within Canada. Each element needs a clear source so you can update your model when rates change. Understanding duties and tariffs. Customs duties are tied to how Canada classifies your product and where it originates. Once you know the correct HS code and whether the product qualifies for preferential duty rates under trade agreements, you can determine the duty percentage that will apply. Multiply that percentage by the dutiable value of the goods to estimate duty per shipment. If your product is duty-free, duties drop out of the calculation, but you still need to include taxes and fees. Treat duty as a variable that depends on classification and origin, not as a rough guess. GST, HST, and other sales taxes. Sales tax is usually calculated on the value of the goods plus duties, and in some cases, certain freight and insurance charges. The applicable rate depends on the province where the goods are supplied. Some provinces use HST, others use GST plus provincial sales tax. If you act as importer of record under a delivered duty paid model, you or your broker will pay tax at the border. That tax becomes part of your landed cost, even if you can later claim input tax credits as a registrant. For pricing purposes, you need to decide whether you are treating that tax as a recoverable asset or as a charge built into your price. Brokerage and handling fees. Customs brokers and couriers charge fees for preparing and submitting customs declarations. These can be flat fees, tiered by shipment value, or bundled into shipping rates. On low-value shipments, brokerage can be a surprisingly large share of landed cost. On high-value freight, it may hardly register. To build a realistic model, collect actual invoices from your broker or courier and calculate an average brokerage cost per unit or per order. Remember to include any extra handling or disbursement fees carriers charge when they advance duties and taxes on your behalf. Domestic freight within Canada. Once shipments cross the border, they still need to move through warehouses, fulfillment centers, or last mile delivery networks. Those legs carry their own costs, whether you pay them directly or through a third party logistics provider. If you quote all in delivered prices, domestic freight and handling charges belong in your landed cost model. Ignoring them makes your margins look better than they really are. Allocating overhead and compliance costs, landed cost is not just about direct charges on invoices. There are overhead and compliance costs linked to cross-border trade, customs software, staff time for documentation, and ongoing classification and origin analysis. You do not need to track these costs down to the last dollar for each product, but budgeting a realistic overhead factor per shipment or per unit reflects the true cost of serving the Canadian market. Building a per unit cost model. Once you know all the components for a typical shipment, you can convert them into a per unit landed cost. Start with the total of product cost, freight, insurance, duties, taxes, brokerage, and domestic handling for a representative shipment size. Then divide by the number of units in that shipment. If you sell in multiple quantities, you may need separate models for small parcels and pallet orders because fixed costs like brokerage spread differently depending on volume. Scenario testing and sensitivity. Landed cost is sensitive to changes in currency, freight rates, duty status, and tax rules. Building simple scenarios helps you understand how robust your pricing is. You might test what happens if freight costs spike. if a trade agreement benefit disappears, or if you shift from customer-paid duties to delivered duty-paid pricing. Looking at those scenarios in advance helps you decide whether your margins are wide enough or whether you need different pricing tiers for different order sizes and regions. Using landed cost to set Canadian pricing. Once you know your landed cost, pricing becomes a strategic choice rather than a guess. You can decide how much margin you want above landed cost, whether you will absorb certain charges to stay competitive, and how your prices compare with Canadian competitors who manufacture or distribute locally. If landed cost leaves very little room for profit, you may need to adjust product design, packaging, or shipping methods to reduce cost, or focus on higher margin segments that can support a higher price point. Final thoughts. Calculating landed cost for Canadian customers means pulling together every piece of the cross-border puzzle. Product cost, freight, insurance, duties, sales tax, brokerage, domestic delivery, and a realistic share of overhead. When each component has a clear source and is refreshed regularly, your team can quote prices with confidence and spot when rising freight or duty changes threaten margins. Instead of discovering profitability problems months after the fact, you can see the full economics of each sale before the product ever leaves your warehouse. For teams building these models for the first time, there are more detailed worksheets and examples available on our website. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.